Andy and Steve take over. Hey, what's y'all doing today?
Hello, Scott. Thank you. Hey, everybody. Hello, Andy.
Hey Steve, hi Scott, hi everyone.
All right. Pleasantries aside, welcome for the Trade of the Week webinar every Tuesday. You'll find us here. So, as some of the regulars continue to file in, we'll go through just some of the early slides here. The reminder that myself and Andy trade our own accounts. We're also employees of Trade Ideas, but anything we talk about here really is our own opinion. It's not to be taken as financial advice. If you need official financial advice, you got to go seek out the brokers. All right, and the next slide to remind you that Trade Ideas is a very rich product platform. There's a lot going on, and it's not unusual to take a week or two to really start to feel comfortable in how you can make this platform work for you the way you want to have the market disseminated, because that's really what we're doing here. Is we're just kind of slowing things down for you and letting you drink from the fire hose of data. And there's almost 9,000 symbols out there in the market, but we're all different in the way we want to trade, and at the moment we want to see them. Trade Ideas allows us to see those symbols hopefully in real time. If we can scan for it, we'll do it, but it's not something that comes easily overnight. It takes a little while to learn, as I said, so we try to shorten your learning curve with our webinars, Q&A, and primarily Barry's live trading room every day, Monday through Friday, for pretty much most of the market day. You know, he usually folds up shop the last hour of the day, and I don't blame him for that. But we take over for him midday every day, one of the other guys here, and give everybody kind of a different flavor of how we use the product, and maybe a different way to answer a question you guys have, because sometimes maybe there's just a better way to answer the question or approach a particular type of scan that you want to pull out of the market using our platform. So we're there during the support sessions 12 to 1 Eastern daily, and to get there you just go to that URL at the bottom, just a redirect, and then once you're in the YouTube algorithm paradigm, they know that you like us, and they'll just keep serving it up for you for that 12 noon hour. All right, as usual, just always a tremendous amount of examples week after week. It seems like we can always give for this slide here. The human and machine combined is much stronger than a human or a machine on their own, to paraphrase. And that's really what we do here. And it's the world we live in now. We're going to use Trade Ideas to help curate ideas in real time. And the human is really a much better way of managing those trades than the machine is. So just always a nice way to kick off the webinar with that slide. All right, so July 13th, we'll get going here. Market recap as usual, maybe a sector rundown, AI recap for Andy. Trade of the week didn't work, but we'll talk about why and make it a learning, teachable moment. And tips for a difficult trading environment is what we're going to kind of move into after that, because that really is what we are in. You know, no matter whom I'm talking to, all the professionals I've known forever. You know, we even had a Trade Ideas event on Thursday, and you know, Brad, one of the partners here at Trade Ideas, has been trading as long as I have. He looked at me and he said, "It's been really hard lately," and that's just been, you know, the kind of the banter and what's been discussed, you know, going on behind the scenes here for us here at Trade Ideas. So I figured it would be a good idea to maybe kind of go through and revisit. Here we go. Some tips for a difficult trading environment, and then sector scan there twice. And we'll finish off with chart requests as usual. All right, so let's see here. Is TI fully linked to the interactive brokerage platform? If so, is it a duplication to subscribe? No, they're apples and oranges, Ray. We are the data that feeds the interactive broker. We can attach Trade Ideas to the interactive brokerage API. We use our Brokerage Plus module right here to do so. And beyond that, they're two standalone separate companies, but they work well together. Hopefully that answers your question. All right, so yesterday in Jamie's webinar, you know, I kind of made the case that I said often, there's no bear case to be made, but I want to revisit that. There's no technical bear case to be made, all right? There's just kind of a technical case to show that we're just kind of winding our way through this channel. And as we get to the upper edge of the channel, oftentimes we start to sell off and pick up the lower edge of the channel. You know, maybe that's where we are up here. Kind of an interesting little reversal at the end of the day, especially when we look there at the 15-minute. Zoom out a little bit. We just broke, you know, after 2 solid days, 2.5 solid days of holding my momentum line, the 10 SMA, we broke midday. And then of course, on the heels of last week, once that candle breaks and closes below our signal moving average, likely it's going to continue. And that's kind of what we got today into the close. But one candle doesn't mean much. We're just, like, as I said, at the higher end of this channel, probably due for a pullback. But you know, I want to clarify, there's no bear case to be made. There's a ton of bear cases to be made. It's just getting the charts to confirm them. And when we look at the SPY chart, and we talk week after week about how we laugh about the market's up 1%, but all my positions are down 3 and 4%. You know, what gives day after day? And you know, I mean, including the trade of the week last couple times. Not everyone, but this week for sure. But you know, what's holding this market up? It's pretty much stocks like Amazon, Apple, Google. These are the stocks all been doing great as of late. Microsoft, you know, even Tesla's been doing well, took a bit of a break, but the big horsemen are the ones that are just driving this market higher. It's just not really showing up in the individual names. And we call that market breadth. All the stocks making new highs versus all the stocks making new lows. It's very tricky to look at the S&P. My mom, you know, she talked to me the other day. She's like, "Hey, the market's going to highs," you know. And I'm like, "Well, I know, but some of the stuff I'm trading in your account isn't necessarily reflecting that." And that's problematic when that doesn't work. And so there is a bear case to be made. Inflation is insane. You know, we've had a pretty big run. There's a lot of things you can point to and say we should be rolling over. You know, I remember a day when Andy and I used to trade back in the 90s and early 2000s when the market saw econ data like CPI that came out today. It didn't brush things off like it does today. And so, you know, I don't know why, but that's just the way it is, and we have to play with what we're given. So I am long 0. I'm long some silver, and I'm long 0 stocks in all 3 of the accounts that I'm trading in right now. I'm not seeing it. I don't like it up here. The attempts made in my personal account, they're just not going anywhere. So I'm going to pull back a little bit. And again, we'll talk a little bit more about that later in this session as a trader, some of the things we can do when what used to work stops working. And I'm a little nervous about this market up here. You know, I think definitely a correction is probably in the order back to the channel that we've been in. But what happens again when we get to the 50? You know, at some point, this 50 moving average is not going to hold. Now, if I was making money in my positions and everything was going great, you know, I'd be in more things right now, but I'm not. And I just don't see a case really to be in anything right now. It just feels really weird out there. Can't put my finger on it. And there's really not much to add when we bring in the Qs. It's been a wonderful month and a half of rally there in tech stocks. You know, again, one candle doesn't always make it, but that's a pretty interesting little topping tail. It could be, maybe, I don't know. The IWM never really got going, and it was kind of one of the quicker ones to roll over today. So small caps have rolled back under all their moving averages, and it's a very difficult market right now, unless you just want to buy big tech and hold on to your shares of Amazon above 2,000 or wherever it is. Anything you want to add to the market recap here, Andy? A little salty, I know, but that's where we are.
No, I totally agree with you. And, you know, the IWM kind of gives a picture of our sentiment, you know, with a lot of the stuff that we play. And I think I talked a lot about this in my Thursday webinar as well. You know, it's just, you know, if you're sitting in a portfolio, maybe your 401k and some funds that have a lot of weighting with the stocks that Steve mentioned, you're probably doing well. But for a pure trader, I don't know, those stocks, you know, this is I don't know, it's just not a lot of excitement in the percentage gains that you get out of those versus some of the stocks that we typically play can be kind of mundane. So I'm with Steve. You know, I don't, I think I cleaned out today, don't have anything, and I'm perfectly fine. I don't like the geopolitical background right now. I mean, of course, that's not a reason, but you know, climb the wall of worry, like it can continue to do that. But for whatever reason, I I'm not seeing it right now, and not that I'm getting crushed or anything. It's just trading
Yeah,
is. I just don't like the risk reward ratio right now. And
yeah, again, the risk reward ratio, taking a bunch of new positions up here after we've had this, 3-week move, and then with everything out there, and at some point the inflation story is going to come home to roost. I just don't know when.
yeah.
But anyway.
But no, nothing wrong with pulling back, even if the market's at all-time highs, and just sitting back and being patient and waiting for your pitch. So if you don't. Yep.
All right. Well, if you want to talk about, at least there was some good trade ideas over there on the machine human side.
Sure. And this is going to be a fun little segment because you guys, if you're not aware of it, you do have the new docking version available in the beta format on our website. So if you haven't, I'm sure a lot of the names I'm seeing in the questions panel probably was first ones to be notified and jump in and download it. But if you haven't, it is available. Just go to our website, find the downloads, and get the new beta version. And you will have the new docking feature that we have. And what a better way to show it than to go over the AI with the docking channel bar that I created. So what you want to do is go to New and go to New Dock Channel. Okay, that's going to pull up the channel bar inside a docking window, and then you can just click on Omni AI, and you're going to get a real cool, crisp picture of the AI windows, along with a couple of charts in a single stock window. And also, you'll have access. I'm not going to go through them. Maybe I'll do more of that on Thursday. But anyway, I think you're really going to like the new docking channel bar versus the channel bar that you're accustomed to. It's a lot more cleaner. It's a lot more easy to read. But you're going to find all of them is going to have a single stock window, a good daily chart, a good 15-minute chart. Everything's going to be pretty much standard with using the same data points in the single stock window. So I think you're going to really, once you get familiarized yourself with it, it's going to be a lot more intuitive. All right, so today, this is the Omni channel, so you are seeing all the trades fired from the AI today. I should say alerts. AI obviously doesn't actually trade the money, but it does alert us in real time and gives us some great opportunity. And what a good opportunity we had today in this VIVO short that popped up 5 minutes after the bell today. And you can see the trigger there. This was a no pain trade, basically. In other words, it opened up, went immediately down. The signal right there was at 21.25. And then you had a whopping 8, if you held it to the close, almost a 20% gain there in moderate profit. And this is what I'm talking about, guys. You heard me say over and over.
Do you have the 10 SMA on there?
I'm sorry?
Do you have the 10 SMA on that one by chance? I'm just curious.
Yeah, it's a light green one. Maybe you can't see it very well, but it's in there.
I see it. Okay, I just want to see how well it held that first test really nicely. And that's what I always try to interject and talk about human and machine. The machine served up a great idea. The human said right there, hey, that was me. If that was me, if that candle didn't close back above that moving average, I would have got out. That kept me in. That little rule would have kept me in. So I like to call that out on those AI trades.
Sure, no. It's a great it's a great strategy when you're trying to figure out how to hold on to trades longer. Maybe just pick something, and Steve and I both like that 10 SMA. We used to use it at Today Trader all the time, and yeah, that's a good little way to keep you in a trade. But wow, what a great trade. And getting back to what I was saying, guys, it's the people who get in these positions and hold them not 3 or 4 minutes, but 3 or 4 hours, and then sometimes even to the close of the day. That's where the real money is made when it comes to day trading. All right, let's move over to the next one. Great trade there, 20% gain. STEM, another short today, about an hour after that one, and another beautiful setup, okay? Because you had a first 15-minute drive down, and then what do you see here? A stock that could not bounce, a stock that went for the next hour, kind of just went sideways. Okay, the signal right there at 30.11, and it did come back and pretty much come back to your entry, but once again, I would have to call that no pain, maybe a couple of cents. Shouldn't be any pain. And then what it did, it rolled back over. Now this one did vacillate back and forth, but it was before you had, you know, a serious break like you see here, and then it stayed below that 10-period moving average. So good trade there. If you took it, I thought this YY was a great little bottom fisher. And you can see it here. If I scroll out on the daily, this thing has been beaten up, has fallen all the way basically from 150 all the way down to $60 range. And then it had a little nice little bounce there on volume today in the early morning. Not huge volume, only slightly above normal, but I think it was a little bit more in the morning when I looked at it. There's your signal, back and forth for about 45 minutes, and then had a nice little pop up there for a $2 gain in that. And if you held it to the close, it would have been about the same. So, man, really nothing really bad today. This was kind of late in the game. I don't know if I'd have chased that green candle, but still, you know, 35 cents there. FGen was the one that didn't work if you held it to the close and didn't get out on that drive down. But you would have had plenty of time to get out in this one before, you know, it popped up. So all in all, Steve, a great day from Holly, especially because of Vivo Holly. All right, so I will shoot it back.
Holly.
There you go.
Yeah, actually, Baiju is correct. I think on that one chart, it's not the 10. You got the EMA, you got the 13 and the 8 on that one. On
Oh, okay.
Just qualifying that. And I
Yeah.
caught it too, Baiju, don't worry.
Yeah, you know what? This is one that was probably in there. That
template, yeah.
a template that I kept. Yeah, but you're right. Most of them I'm going to have the 10, but that is the 13.
All
So
right.
thanks for pointing that out. May have to change that. I'll shoot it back to you. Unless you have something to add.
No, that's it.
Okay.
That's good. All right, so before we talk about this trade of the week, let's just go back real quickly in the theme of guns and ammo. Remember, Powell was a trade of the week 2 weeks ago and gave us a pretty nice move. You know, from when all was said and done, that was a pretty good 20-25% move. Now we're on the other side of the mountain. You see that sell tag today. That's me exiting this trade. For those of you who were with us last week, I talked a lot about the doomsday candle, the candle that breaks the line in the sand. And I sold this at the close, or before the close, actually. I could just see it wasn't going to make it and get back above this 20 backstop that I was really kind of hoping would hold. So great on the heels of this technical breakdown here. It'll work nicely with Smith & Wesson, but just a reminder that these things don't go in one direction for very long. And then last week was the super short squeeze of SPRT, gave us 1 day of excitement and then 2 days of roller coasterness, popping back up into the close and really doing nothing since then. I'm not in this trade at the moment. Because I said I began the day by saying I'm in nothing, so that would include nothing that I'm in. You could make a case for this thing consolidating, but I'm just in a mood where I just don't trust a whole lot of things right now, and we'll talk about how to try to deal with that mood here in a minute. So that brings us into Smith & Wesson, thinking that maybe there was some strength on the heels after that incredible earnings surprise they had. Blasted way up, got way ahead of itself, broke through the 10 SMA, and then as we saw it coming into the weekend, it looked like that, a nice test and a bounce off of the 20. And so the play here really was to try and use the 20 SMA as our backstop and maybe catch a bounce of a day or 2 or 3 of support and follow through and movement back up to the upside. That's what I'm trying to say. We didn't get it. And not only that, we got one of those horrible entries that just tickle the prior high and then just proceed to sell. Yesterday was not the idea of this is to sell if it closes below, just like I demonstrated a moment ago in POW. The closing candle, if it's going to close below in the last hour and you see it and you feel it, or if it's even sooner, you take your lumps off, you rip the Band-Aid off and you move on. You know, not a big volatile move, but it was enough to just grind us out of it. And There's also a case I was wondering, maybe we should call some of these the actual entry. Maybe we should call them on the pullback to the 20. And instead of using, the prior high right there where that green line is, say, well, maybe this one's going to be a pullback entry. But, we really don't do that a lot. I'll do it all the time in trading. But in calling that out and mapping that out in a plan, I don't know, it just seems like it could confuse some people. So, we don't really necessarily try to call those out. We have in the past, but it's very rarely. And that's one thing that we can do, again, which I will allude to, contrarian type of entries can, get us in and get us a good entry. That would have worked well yesterday, thinking on the close yesterday, you had a good contrarian entry if you'd have bought off the 20 instead of buying the break of Friday. But today it just tells us, no, this thing isn't done. More than likely, this thing just has a date with the 50 down here at some point. I don't know how it's going to get there, but there's no point in participating in that. We didn't get what we expected. We expected a nice bump and test off that green candle, a little bottoming tail off the 20. In the market we had last year, this thing very well could have been money, could have taken out the prior high and then just popped a couple green candles out and given us a nice 10% move before you even knew what happened. But we didn't get it. And this is, again, part and parcel, another great example of just the paper cut failures that are happening across the board as a trader right now. If you're a good short seller, you might be getting some good shorts off. You never know. But if you've been trying to play the bull side of this market, it certainly is acting like a bear market. Bear markets do things like open up and sucker people in and then just sell. Technically we're in a bull market, but I tell you, some of these stocks, they sure do behave like they're in a bear market. Anyway, is Holly fully secure from adversarial attacks? Yes. We have never had an issue like that. It's basically just an overnight process that layers and builds upon itself and rejiggers the configuration of the different alerts and filters each day. So it's a good question. I've never had that question, but I'm pretty sure that's nothing to worry about there, Ray. All right, so trade of the week triggered yesterday, got us out today. Another paper cut. What can we do about that? Well, there's a few things we can do about that. When things don't start working, the worst thing you can do as a trader is to just double down and keep going until they work. That's the definition of insanity, and we don't want that. Andy and I have been around, and we've seen a few cycles and a few bear markets and a few changes and things, and got a few tips. And I marked them down here. Things that you can do when trading gets really hard out there. As if trading isn't hard enough when it's working, it's really hard when nothing really seems to work and you're trying all your arrows and quivers and shots. One of the first things you want to do is get small. And aside from being a great Steve Martin joke in the 70s, remember he said he didn't like to get high, he liked to get small, sometimes really small. But this means share size, okay? So if you're normally taking $5,000 clips out of your, $50,000 trading account, well, maybe you should be taking $2,500 clips. Maybe you should be taking smaller share sizes until you can feel you're back in the rhythm of the jump rope again. So get small is certainly something to do when things aren't working, and especially when things get volatile. When things get volatile, getting small doesn't even feel like you got small because things are still moving pretty quickly. Another thing you can do is create circuit breakers for yourself. Whether you're a swing trader and you want to do like a circuit breaker for the week, or you're a day trader and you want to hit a certain level for the day, there's two ways you can approach this. And Andy and I used to do this all the time as day traders. There was a level where by like 9 or 10 o'clock on the West Coast here, if you were up a couple $1,000s, you wanted to protect that. And so I'll start off with the positive circuit breaker. The positive circuit breaker is when you're doing well, the worst thing you can do is give that money back. And so, if you hit that level that you just really are excited that you just hit that level for the day, you've got to protect that for your own mental sanity. And so we would give ourselves, we call it a 20% rule. Well, if you were up $2,000, well, 20% would be 400. If I go back down and hit 1,600, I'm going to exit my positions, turn off the machine, and go golfing for the day. That's how we used to do the upside circuit breakers. Well, the downside circuit breakers, I think, are pretty self-explanatory. If you don't want to lose more than $700, $800, $900, or $1,000 on a day, and that's relative for anybody, that could be $50 or $100 for somebody else. you have to shut it down and go to paper trading. You don't necessarily have to leave, but you can go to paper trading and start, trying to see what is working. But you've got to be able to weather the storms and stick around when things no longer start working, which is a great segue to Who Moved My Cheese. It's a small book that somebody recommended I read and apply it to trading, and it was extremely relevant. And Andy read it too. And we actually did a webinar on it way back when. And it's just a great little parable. You can search that title, and it's a 1 hour read, if that, about two mice that show up every day in this labyrinth, and they show up in their corner, and their cheese is there waiting for them. Kind of like some of these trading setups were waiting for us in November, December, and October of last year in the fourth quarter when things were really going crazy to the good side. But then that cheese is gone. And so this parable talks about what these rats do and how they adapt with it. One rat says, nope, I'm staying. I know the cheese is coming back. And the other rat says, I gotta reinvent myself. I gotta go find the cheese. And obviously, I think we know, how that story probably wound up in the end. You can't just wait for things to come back to the way they worked before. You're going to have to reinvent yourself and find a way to go out and get that cheese, because failing to adapt really is one of the biggest killers of trading. Andy and I started trading in the late 90s, and we were a few years behind the bull market, where some of these guys were coming in and they just had all the swagger in the world. And they'd have $50,000 days, $80,000 days, and just wow. And we heard that they were multimillionaires from trading. Way to go. And then around 2003, 2004, as the market just went silent and things weren't as good anymore for a little while, we started hearing stories about, remember so-and-so? Yeah, he blew up his account. No way. I could not believe that somebody so smart that could build their account up couldn't adapt and pull in and focus on how to protect that money. They just kept swinging away. And I remember that was a very big lesson for me. So, just a couple of parables there to remind you that when things aren't working, you've got to make a change, you've got to find out what's working, and you've got to pull back. Another type of thing to consider really from the beginning, the foundation of your trading endeavor, is what type of money are you trading? Are you trading money that you saved up and you've deemed educational, and this is going to be my tuition, and I'm pretty certain I'm not going to do that well in the first 6 months or a year? Or are you somebody who's saying, look, I got a pretty good sized account here. I should be able to figure this out pretty quickly. But in a year's time or so, I'm gonna have to start being able to pay the rent with this money. You're doomed from the start if that's your account. If you're trading that type of money, you'll never be able to recover from the emotions. You've got to be able to approach this from an unemotional perspective. And that usually starts with money that you can afford to risk. So, keep that in mind. Focusing on the end of the week rather than the end of each day, especially as a swing trader, you have 4 or 5 days in a row that just aren't adding up. You think the world's collapsing, but you just got to keep things in perspective, keep things in your own perspective, and don't really deviate from that. Focus on, if you can, how'd you do this week and how'd you do that month? But day by day, things are going to jump around. Journaling, something that I don't do enough of. I probably could do more, but I'm just stubborn about that. I kind of have my own ways of journaling. And what I'm doing right now is essentially journaling because I'm talking about it and we're laying it out. But for those of you who haven't, you really should consider doing it. What I'm going to do is I'm going to copy and paste this link here. There's a company out there. It's a free company. It's called Tradervue. And they have a great platform for traders to aggregate all your trades and data and then organize them and go back and look at them and try and get things out of it. So let me drop that in the chat window there, and I'll send that to anybody who wants that. That I do have a link for, Liliana. The other one, the book, I don't. You just got to search it. Journaling can really help put things into perspective, things that you may not have realized, like, wow, I'm losing all my money in the first hour of the day. Maybe I should heed that data. But you can do that. And so that's another very important step, I think, and just not swinging the bat over and over. Step back, take a look at the data, see what's going on, and your own thoughts, your own journaling, of course, is always a good practice. Kind of like I was mentioning a second ago, narrate your own trade as if somebody was watching. Andy and I started doing Today Trader back in like 2009. One of the first people really to kind of open up our desktop to people seeing what we were doing and talking in real time. And there's no hiding from bad trades. So we started to become real selective in the trades that we took because there were eyeballs on us. And it made me think one day, well, geez, you know, the average person, they just kind of hide in the corner and they break all their rules and their demons come out and their demons come out again. You know, if you kind of pretended like you were conducting your own webinar and you were being accountable to all your trades and walking through, you know, in your own mind, it's just kind of an exercise that can help you as well, because you're forcing yourself to be accountable and you're less likely to start getting on a rampage, rogue trader, and breaking rules and doing emotional things. And then lastly, really contrarian entries and exits. I kind of touched on that a moment ago with Smith & Wesson of how, you know, maybe it would have been a better idea to try and buy a pullback, looking at those moving averages, buying things on the 50-day moving average rather than waiting for breakouts, because breakouts, they worked last year, they don't work anymore. They just confuse and frustrate. So the more contrarian you can be, in other words, buy when they're selling, like those jam down alerts I've talked about a lot on the open. Sometimes those are some interesting ones. If you feel and like you're in the mood, which I'm currently not, but if you are, you can jump in and buy when they're selling on those jam downs on the open. And then likewise, I think I mentioned maybe last week, but you know, the first half of Powell, the profit I took was exactly by textbook, the way I always said I like to do it. I had a limit order out there at $9.99 and I was driving on the road and I got hit. I was selling when they were buying. And in hindsight, that worked out pretty good. So that is probably the best advice we can give you. Technically, just try to be as contrarian as you can. If you're following the herds, looking for breakouts, participating in breakouts. Now, that's not to say that Barry and the guys in his room, they're finding some really amazing low float stuff. It's just not my boat. I'm not interested in it, but they are finding some really interesting ideas. So if you're not in Barry's room, might be maybe one of the first places to start, see what they're looking at. But they're contrarian. They're not as contrarian over there because they're playing the momentum. But for me, more of a swing trader, when it gets noisy like this, you know, buy when they're selling and then sell when they're buying is a good axiom that can work for you. All right, let's see. What's Dave talking about? Yes, yeah, the Einstein insanity, doing the same thing over and over. And I had to go through it the hard way. You know, we went. And I both, you know, suffered after the 9/11 in 2001. The market went to hell, and it took a lot of adjustment to get through. And then the market had a tremendous change again in 2007, 2008 with the advent of algorithms. That really started to change a lot of things as well. So it's been nothing but adaptation along the way for a couple of guys like us. Anything you want to add to that diatribe?
No, those were all very good points, and I would like to emphasize the one about you know, a trade as if somebody is watching you. I can't believe you'll be surprised at how much that's going to help you. I mean, because let's face it, when we're in our little office by ourselves looking at our monitor, we'll try to get away with anything, and something that you would not tell your trading buddy that you're doing, but. Yep. If you won't tell your trading buddy, or you don't want anybody else to know what you're doing, you probably shouldn't be doing it.
Probably doing something you shouldn't be doing. Yeah,
exactly. But anyway, no, great stuff, Steve. That's about the
yeah.
only
It's timely because there's been I feel like I hear it, you know, from you and the other guys there. Then when Brad said it to me the other day, it's just like, God, how many more people do I need to hear from that? This is a really hard environment right now. And again, I think it just stems from the fact that we get caught up in looking at the S&P and the Qs, and we just forget that they're just so overweighted. All the things that, for whatever reason, are overweighted, and they're kind of missing the big picture. I don't have a breadth indicator up here. I kind of would love to have had one of those. I'd be curious to see that. But if you guys want a breadth indicator, I mean, if you guys want some homework,
you know what, Steve, do this real quick. This is a really easy way. Just go to new and pull up a top list. And
right.
And go to position in years range.
Okay.
I did this the other day on a webinar, and it really.
In year range.
Year range.
Okay.
Okay.
So we're gonna do
just add filter.
Yeah.
Now go up, hit the show me button. No, the one for position. Oh, you got it. You got it. I'm sorry. I was looking at the wrong one. And just histogram, and I'll put 90 in the min and see what percent of the stocks, even though the market is like 98 and near its high, just put 90 in there. So there you go. Out of 8,700 stocks, there's only 1,500 of them that are in their upper 10% of their range. So That's a
Wow.
very small number of stocks that are, and you can mess around with other numbers. Yeah.
Yeah, 95%. You know,
Yeah.
if you're in the top, there's only 838 stocks that
Even
are in the
yeah.
top 5% of a market at all-time highs.
Yeah. And put 75 in there, a number that you think at least, half the stocks would be in the upper 25%. And it's not even half,
Yeah,
it's,
one
yeah,
third.
yeah. 1/3, maybe a little bit more than that, but still. Just goes to show you it's the weighting that kind of throws everybody in, but the underlying assets, majority of them are not performing anywhere near what the averages are.
Yeah, Jim brings up a good point. I think Thinkorswim and some other platforms have had like record your trading session so you can watch in real time to see what you were reacting to and go back and see what you did. I think that's what
Oh,
you're
that's good tool.
referring to. It's also helpful to record your trading sessions, or you could just do it yourself. Just
Yeah,
hit the record on your screen and just say, what was I thinking on that? I don't know. But yeah, it's always helpful to be self
sure.
introspective to see what's not working that used to work. And again, momentum and small caps and all that fun, momentum and small caps and EVs. Oh my, all that stuff was working so well last third and fourth quarter, and it just died. Just died. I mean, and I loved looking at some of those examples last week that we did of, the moment these things died. It was the 50-day moving average. If you missed that, it's a huge thing for me. Stocks that were once strong, once they lose that 50-day moving average and close below, the thing just hasn't recovered. And pretty much most of the non-Tesla electric vehicle related stocks kind of look like this. Anyway, I saw this actual vehicle in the mall. I told Annie the other day, it's a pretty cool looking little thing, I guess, if you live in the city and you're flying solo. But does the chart confirm the story? At the moment, no, it doesn't. It's under all moving averages there.
Flying solo. I see what you did there.
Yeah, flying solo. Flying solo. That's probably what they were doing. All right. Is there a breadth indicator available on TI? No, we just kind of did a little hack there. But I'm sure a good Google search, and I'm sure there's a market watch or something that might be out there that might have something that would give us a breadth indicator to give us a visual of how many stocks are at highs versus lows. Oops.
Well,
And
the compare count window will help you. Yeah. If you want to
yeah, the
create,
compare count window. Sure.
you try that. That'll definitely. It won't give you a hardcore number, but you can at least watch. Well, it could.
Actually, this
Give
is
you the
something I
percentage.
wanted to talk about last week, but I didn't. This is a very simple alert. Look at this. It's just an alert. Okay, if I configure it, it's nothing more than highs and lows with
Mm-hmm.
no filters. Okay, no filters. But what I'm doing is I'm pulling from the symbol list we call S&P 500. So in real time, as you could see, as we were going into the close, as I scroll back, yeah, a lot of things hitting lows, but even though that's kind of what the market was doing. So the point is, this is a very simple kind of a pulse indicator that you can build for yourself. Just high, new low, new high,
Mm-hmm.
and pull from the S&P 500, no filters whatsoever. And in real time, sometimes I'll look up and I'll see this thing is just bright red, and I'm like, whoa, I'll pull up the spiders, and the spiders are starting to sell off. So it's just another way of kind of keeping your finger on the pulse of what's happening. As a swing trader, I don't live and die by it, but it's always kind of interesting to look up and see a bunch of green and okay, well, you better see if this is lifting your stocks, because these stocks seem to be on highs. Anyway, very
No,
easy to.
Stephen, I'm glad you. That's a great little indicator there. And if you scroll down, look at the change from close percentage and all these. I mean, most of them are going to be around 1, 2, and 3, and so you see some carnage going on in a lot of individual stocks. But
Good point.
then you look at the SPYs and they're down 0.38%. It's like that's the
Yeah,
kind of stuff we're seeing
yeah,
right now, and it's
yeah. A little bit of green in there,
that,
but not
yeah,
much.
not much.
So can't put our finger on why it's doing it, but the market's doing something silly, and I'm not really in the business of trying to go full leveraged long with positions across the board and try and guess and figure it out right now. I'm full turtle mode, cash with a lot of PSLV ETF, and just kind of hanging in there to see what happens. And I don't feel like I'm going to miss out. The FOMO is a very strong emotion, and when you go to all cash and you see people making money, if they are, and you see stocks going to new highs, and you start to kick yourself like, what am I doing here? But I'm comfy. I'm very cozy in being in all cash right now. It's been a couple of months of a lot of stress that I didn't really necessarily need. But anyway, I could sit up here and tell you that we do nothing but make money here at Trade Ideas, but what value is in that? I'd rather sleep well at night. Markets are hard. We got to figure out how to trade them as best we can, and Trade Ideas is the best tool that we have. All right, so yeah, let's just go ahead and move. You know, I was going to try and say, is there anything in the sectors that looks like there's a safe bet to hide in right now? Interestingly enough, the electric vehicles have been doing nicely as an ETF there, but I'm not seeing a whole lot. USO, we're seeing inflation in the USO commodity there. Gold, there's no safe haven in gold even. Gold miner juniors can't get going. There's that tech. Healthcare, I did notice that earlier. That just seems to, for whatever reason, keep going higher. XLV, the healthcare stocks, but whatever. I'm not seeing a whole lot of sectors in here that I really like. Matter of fact, let's see. I think I thought XLF was interesting. Yeah, there it is. XLF had a horrible day here, closed below its 50-day moving average, and has not been able to get back above since. So I start to see correlations like that, and it just feels like we're behind the 8 ball right now, really trying to force things. So I'm not interested in trying to force anything. So to finish up here, before we bring Scott in, we can look at any of the stocks you guys want to look at. Maybe there's something better out there that I'm missing. Let's take a look. Let's see what you guys want to talk about. Any thoughts on the CCIG?
merger?
Well, that's thoughts on a merger, but I can have thoughts on the chart. Not a bad looking chart. It's trying to make higher lows.
Now it's rounding bottom.
Now it's in very nice rounding bottom, because it's the longer you can have a defined rounding bottom, the more solid they are. That's a very solid rounding bottom. I didn't mean to dump on EV cars there a little bit, but because I did notice again that, you know, for the electric vehicle ETF, they've had a good little movement here last month. Okay, for Gaj, DT, and Alcoa. DT first. Had a really nice move down here from 42. God, I bet you it's starting to feel a little tired just looking at it. You know, if you're in the money, you might want to take some off, because it's been a nice move. I could see this thing trying to give a little bit back, but that's just me.
Look at that 10-period moving average. No, I closed below that. So all you basically got to. I mean,
yeah, one close below that, and it's probably the same day. You're going to have a date with the backstop of the 20 on the same day. The next one for Gabriel was Alcoa. Always first to report. Very first thing that comes to mind when I see this. Same thing I just saw with FXI. First close below the 50 has not really been able to recover. So Alcoa is now under the weather a little bit, and it's going to be guilty until proven innocent, I would say. Need to get back above that 50-day moving average. That's such a simple black and white bill of health for me when I look at stock charts.
And earnings in 2 days too, so you got
always, yeah, always the first one. You know, a little gap that came back and filled there. It's probably just going to sit in this holding pattern and wait for earnings, and that is going to be July 15th coming up. All right, for Dave, the Dave trio, NVIDIA, AMG, and V. NVIDIA, a horse, just always has been a horse, hasn't stopped being a horse, but closed below its 10-day moving average today. Not by much. Let's see if it did an L. Let's see. 810. What was the close? 810. And it closed by a dime, a tenth.
Yeah, that's
tenth of a
I don't know
dollar.
if that's significant or not. Yeah.
I don't know if that's that significant, but again, the thing has moved really nicely down here from 540 to 800. I feel like give back is coming in NVIDIA, especially if this market has a little bit of a correction. But if that 10 gives way, then the 20 is going to be right behind it, probably on the same day. The other one you had was AMG. Do a few more here. AMG got ahead of itself. Likely it's going to pull back and pick up that 10 SMA, I think, in the next day or two. And what's this? Visa?
Strong.
Yeah, that's because they're charging unbelievable interest on free money. I could do that too. Yeah, it's a good looking chart. Even though the financials didn't look that great, that one looks pretty strong. All right, a few more to get through here before we bring in Scott. BioC, downtrend, nothing but a downtrend. You're waiting for Superman on that one, especially as the moving averages get fanned out. Need to start getting back in there and making some better closes. XLEA.
That was one of Barry and them was playing today.
Boy. Right.
Yeah.
Okay. So Barry is playing the momentum. What does this one have? A float of 23 million. Yeah. Look, if you want to go switch to the intraday, look at what happened. Once it broke and closed below the momentum line, you never got a better price. And that's what I like to look at a lot of times in momentum stocks. This one probably needs a little bit of a breather. Big reversal tail on the daily chart there too. It's kind of screaming right at us. EOG. It's just looking for a reason to try and hang in there, but it's building itself into a wedge. I don't like how it's pretty much below all of its moving averages as opposed to above, and it's had a pretty good run as well. Resources, this thing has come from 30. This thing has almost tripled in price. I'd be very nervous up here. I'd be nervous about a lot of things because things that have moved this far, when they break, they don't give you much time to think about it. So, you know, if you're thinking about it, always you can take half off and maybe thank yourself later, maybe not, who knows. As a swing trader, what's the best tool to assist in identifying range bound or channeling stocks? I think, Robert, our position and range indicator, Andy's built some interesting swing trades using the position and range, like starting with position in 30-day range and then coming down to a position in 10-day range. You can kind of create, you know, like a funnel or kind of control what you want to see or not want to see. That's one thing that comes to mind for identifying range bound ideas, unless you have anything you want to add.
No, I agree. It's difficult. It's not easy, but once you start playing around with them, just what Steve's telling you, focus on that position and range, and then you can also use just the range filters to kind of limit the size of the range. So get around, start playing with that, and you know you can send an email in, and we can help you get started.
Yeah. All right. Well, that's it for the questions, and that's all I got. So let's bring in Scott for any announcements. And thanks all. Be careful out there. It's a little tricky right now.
Yeah, sounds good. Dropped a link into the chat for the beta download if you guys want to get that new version of Trade Ideas 5.5.15 that has the containers and docking windows. So again, that's trade-ideas.com/beta. You should have gotten an email about that today too, if you are already a subscriber. Trade-ideas.com/strategy is the place to go to get our new favorite strategy indicators ebook from our director of software development, Dave Mabe, in which he talks about his favorite ways to use Trade Ideas strategy indicators and set up scans. So go ahead and check that out. He's got some good insight for you. We do have a podcast. Hopefully have a new edition out soon. Just search for Trade Ideas Podcast wherever you listen to your pods. And do check out the interviews we conducted earlier this year. They're pretty insightful. There's some good ones in there. So check out the archives and get ready to catch the next one when it comes out live. Sunshine is a code that'll save you 15% off your first month or year of Trade Ideas. So use that for an upgrade or to start a new subscription. And you can find Steve on Twitter at TISteveG. We also got at Trade Ideas, at QuantBots, and other handles that you'll find. If you follow one, you'll see the other ones. Trade Ideas Pro is the Facebook.com handle. So follow us on Facebook at Trade Ideas Pro and share what we post with your friends. And any questions, send them to info@tradeideas.com. It goes to our help desk, gets you the support you need right away. And the recording of the session will be up later on tonight or tomorrow. So you'll get an email reminder from GoToWebinar tomorrow with a link to the playlist where you can find it. Thank you. Thanks, Steve. Thanks, Andy. Have a good one.
Yep. See you next time.
Thanks, everybody. I'll see you on Thursday. Bye-bye.